So our next guest was a long-term oil bull who's now gone bearish on the commodity. He made the switch about 6 weeks ago when crude was near its 2023 high. Let's bring in Paul Sankey. He's the president and lead analyst of Sankey Research. So you're bearish now. You still see trading opportunities among oil equities, so we'll get to that in a minute. But where do you see oil going at this point?
Well, at the moment, it's really all about the Sunday OPEC meeting, and I think we're concerned about that because we feel there's some kind of tension between Russia and Saudi, who are the two key mega players, really around Asia, and the fact that Russia is now taking Saudi market share quite aggressively in Asia with heavily discounted barrels. So I'm not sure, based on two previous meetings that you referenced, where they really didn't cut, they said they would and they didn't, that they can bring out much from the hat at this meeting. And as I've said, there's a tail risk that we could go to a worst-case scenario, which would be a March 2020 market share war, where at the worst possible moment in the market, Saudi actually cranked up to its all-time high production levels to make the point to Russia that they needed to cut as much as Saudi did. So, I think that people aren't talking about a tail risk of a potential blow-up at this meeting.
So let me ask you something about the U.S. SPR, right? So they had said they would buy below 70, I believe, and then I think they technically maybe ran out of money. Possibly next week they'll have some money. Do you expect them to be in there? Will that make a difference in the market? Is that enough to change the dynamic at all?
Right. So last year there was an active selling program that was driven by the administration, and it was big. It was 1 million barrels a day at peak. It was a massive dampener on prices, direct downward pressure on prices. And as you know, controversially, a lot of it ended up being exported to China, which drove people nuts. This year there was a congressionally mandated sale for budget reasons that we've completed. And they were powerless to do anything about that, essentially, but they managed to reduce its overall scale. And now in theory, we should be buying, but they announced 3 million barrels. So if you remember, at one time, they were saying 60 million barrel releases, and, big numbers. This rebuild, which is in the second half, is just 3 million. And it won't make much difference, quite frankly. They would have to step it up a lot to really make a difference.
I want to get to your oil equity picks. You upgraded Valero, so you like Valero?
I like Valero. I'm not sure we upgraded it.
Oh, okay.
But I was just with the outgoing CEO, Joe Gordo, who's retiring. He's done an absolutely fantastic job. He's got a fantastic management team behind him. Long term, I love Valero. It's got a great partnership with Darling in the biodiesel area, renewable diesel area. It leads in that area for getting the feedstocks, which is the most important thing with Darling. And as a result, it's a great company. Right here, nobody wants to buy refining into a recession. And I think that the toughest thing is this recession isn't coming. People have been calling for it now for a year and a half, and it doesn't seem to show up. What we see in oil is the industrial economy in China, here, trucking, real heavy parts of the economy are all slowing big time. And that's pulling down diesel and distillate prices, which is concerning. But the service part of the Chinese economy, jet travel, individual consumption, the U.S. economy is whatever it is, 70 to 80% consumption. All of that service stuff keeps running, and that's why, economically we kind of remain on track. But you can't help but think that the primary economy is going to bleed through eventually to the consumer.
Right.
One of the things that was doing the rounds on Twitter was Las Vegas gaming revenues. I don't know if you saw them for May, but they're down pretty hard. They had a huge March, and they're coming down quite a lot, which I think is a great indicator of where we're struggling to really call it, which is the consumer. And when the consumer slows down big time.
We always ask you for a pair trade, and you like to short what's hot. And so obviously AI and AI-related things are hot.
Well, if you recall, last time I came on, I said short NVIDIA, long Oxy, which was the worst trade I've made on this program. And in fact, the first losing trade I've made on this program.
You meant buy NVIDIA.
I meant buy. I would say that we got out of the way pretty quickly because I had hedge fund guys telling me, you're insane, you're going to get run over, this is a bubble, don't go near the NVIDIA call. So we backed right off. In terms of what we saw in the debt ceiling negotiation, you saw Joe Manchin manage to get through a permitting agreement, which is a big deal, particularly for the Mountain Valley Pipeline, which takes gas out of the Marcellus, the Saudi Arabia of natural gas, and releases it into the entire U.S. eastern seaboard. We think that's great for range. Amongst others. We're a little bit worried about another big play, which would be EQT, but we're worried that this Biden administration, FTC, might put a block on a deal that they're doing. So we're worried about being long EQT. So the long side is long range. And then on the short side, we're picking gassy Permian names that will struggle once this pipeline comes on because it's going to further pressure gas prices in the Permian.
It's
a little bit involved.
After this, making the
after years of the literally since 2020, every trade.
I think we led you down that scary path in the past, but
yeah, you remember it all started with long Exxon short Apple in August 2020.
You made some outstanding calls.
Right. Well, not the Apple side. I should have realized the Apple side was wrong.
Yeah, exactly.
Don't worry about it. It's all good.
So the trade is long Marcellus, short Permian.
Okay.